monthly trading recap here for this month of December 2021. Man, what a rush. This monthly recap is not going to be so focused on necessarily P&L wise or we do have a little bit of data, or great deal of data here to go over from that paper trading aspect, but yeah, it was pretty much all paper trading, not the last few trading days here that we had, but coming off of the end of November, we went heavy into that full, very, very small position size. If we were actually trading long with the cash count, or if we were doing anything short, it was all paper, and most of them actually even being mental on that side of it too. So that everything gets broken down in specifics in the daily video recaps, and the tickers I do mention that I just wanted to highlight for the month, I'm just going to kind of rattle off quickly here a little bit later, and because I do serve them so much better justice in the actual daily recaps themselves, and the review of them I feel is done better in that those little daily videos. But yeah, we got some data to go over nonetheless, and it seems kind of monumentous to try and review the entire year and a whole. It's going to be coming up on the end of this month will be a year and 4 months for this trading career of going intensely hard at it and committing to it full stroke. And we've been kind of these last 2 months especially, I feel I've been pushing that level even more of my own commitment and understanding of how much more I need to involve myself in, and kind of just slowly peeling back those layers of the onions of the things that I don't know. So exciting stuff all around. Let's get into it. I'm going to start off with just going over the hard data that we had here and keep the SPY just for this last month in the background as reference. But data for this month, we got our win rate back above that 50% mark, just over like 51%. And I'll mention on top of that too, we'll do a little bit more notes stuff there. I just had my journal at the end after this little data, but for that win rate, just mentioning on that, great note for me that even with my entire paper trading philosophy and everything that I was doing each market day was very focused on, okay, I think I see a chart here, whether it's a big percentage mover, it's a multi-day, whatever, blah, blah, blah. Okay, I see a potential pattern here. I think the stock could do this. I play it, and if it doesn't follow along similarly to what I thought it was going to do, cut it, move on to the next one. Even if it was within a respectable risk range, if like, oh, okay, well, it's, we get the obvious bottom here, the volume profile is holding well here, we can give it a risk level till then. If it wasn't doing something that I thought it should do, or a pattern that I could recognize, then cut it, move on to the next one. And I sometimes would end up screwing myself over a little bit and end up getting top ticked on a few of them, and I'm just kind of faked out on that trade. But more times than not, I feel I saved myself the mental capital of just getting out of that trade and cleaning my perspective in order to open my eyes up to what the chart was actually saying. Because I think the rut I dug myself into, I'm getting already away from the data when I said I was going to mention this a little bit later, but regardless of that, I felt beforehand I was digging myself into such a rut. If I was coming to the market, say, okay, I see this chart here, I see the potential pattern playing out from this, I'm going to take a trade from this point, give it this risk level, define my parameters, and stick to them. But when the stock would do something slightly different, but still within a reasonable doubt, a reasonable risk level, to say, okay, well, the trade could still be on. But it would get to that point where time and time again, I would get into those trades where I would still be in it and I would be red on the position, and it would be doing something totally different than I initially thought it was going to do beforehand. And now it becomes a totally different trade. And I'm kind of just like holding on to hot air balloons, just letting them take me wherever they want to go. And I'm trying to come back to the data and say, oh, okay, well, this trade, I hit my risk level here. Oh, what am I doing with my win rate? Blah, blah, blah. Whereas the entire time, I reflect back on it and saying, I was in these trades and I really didn't know what was going on. And I was just kind of just floating around with whatever they wanted to do and at the mercy of their wind of where they were going, because they became entirely different charts than what I was reading them to be. And, I could try to put different labels on it of, oh, I didn't do enough preparation, or I'm just picking the wrong stocks, or blah, blah, blah. But I think the basis of it was I was just trying to trade something totally different than what was actually there. So I think this step that we've been taking end of November, start of this month of December, has been to just break it down, fine tune it to, okay, we need to be in the correct charts first off. That's the first step. Beyond the risk reward, beyond the position sizing, beyond the how many trades we're taking, beyond all those different factors is there a tradable pattern here that I'm seeing and keying in on and pushing the button for. I think that was the biggest step that, okay, we got to fine tune this because we haven't dealt with that. And that's just like the base fundamental support, base layer of this trading aspect that we've got a few more layers to go before we can even talk about consistency and profitability. But it's just at the point of, okay, what are we seeing here? We got to look at this thing totally differently because what we were doing in the past just was not working. We took quite a little bit of nosedive past few months of October, November, after we were riding a pretty nice little pattern trade that I was on of that morning dump setup that just really hasn't been showing itself very hard the past few months. But that's trading, right? To being able to adjust and understand what the market is saying. And if your trade is there, then go all balls to the wall, trade it as hard as you can. If it's not, then lay low or look for something else that fits that personality and allows you to be able to trade profitably off of that. But we'll get back to the data here and go into a little more of that little journal aspect in a little bit. But win rate, back above that 50%. And I'm mentioning all of that I just said because of that fact of I was cutting a lot of trades very soon, cutting them to be losers or little break-even trades, or most of them ended up being just like extremely small paper cuts. But even doing that, I doubled my win rate. My win rate was sucky, 11, 20% or something for what I was doing stupidly with the PDT account, the margin account, and the stupid little cash trades I was doing to the long side. But even through all those little tiny paper cuts or just kind of immediately cutting it if it was doing something funky or something that I had not imagined in my brain beforehand, doubling the win rate and getting it back above 50%. That way it was great data point to see. Average return that we had for the month was a 1.5% winner. Our average winner was a 6.2% profit. Average loser was a 3% loss. That way, so good to see that, we're double the win rate there. And of course, adding that win rate above 50%, that's profitability right there. Above a 50% win rate and above a double multiple winner versus a loser. That's profitability right there. 86 trades that we had in all through this month, which is a step above. I think we were normally hitting around 50 trades a month of what I was normally doing in these past few months with the real actual trades. So even through the paper trading aspect of holding myself accountable to what I was doing mentally and on the paper side, still kind of ripping above what we normally do. And I was allowing myself to do that. That's what I'll get into the monthly goal in a few minutes here as well, of expanding my horizons and allowing myself to have that educational, experimental experience to say, okay, I think this chart could do this, where normally I would kind of, do I want to use a day trade on it? How confident do I feel in that setup? No, go for it. It's paper. Everything is paper. We got to learn. We got to get that reps in. So setup-wise, just tracking that way, I traded multi-day setups at a 50% win rate, and I traded those the most times, almost just under half, 34 times I was in those, with first screen days and also low floaters, of course, coming in second with 14 piece times I was in those bad boys. First screen days, I was a 71% win rate, whether to the long side or short side. Good to see there. Second day plays and third day plays, I did play a lot more, and factoring in, I was going short both of those plays a lot more, a majority of the time. And they were also being, I'll allude to a little bit more of what we were starting the process of these past few weeks. The end of December here was keeping track of those charts, where I really did not have a database, a hard Excel sheet database, and then pull up easy, quick access to charts of, hey, what have been the last 2 to 3 weeks first screen day movers? What have they done? And just even if we have any coming up on the scanner in the pre-markets, being able to compare that, the float, the sector of that stock that's moving today, and look at the past, this little rolling calendar of 2 to 3 weeks, what have these first screen day movers been doing? Because it's great to have these playbook patterns and all these ideas drilled into your head. But if the market sentiment for the past 2 to 3 weeks, for whatever the market's been doing right now, that's all that matters, is what it's been doing right now. You can have the most awesome playbook for the panic dip buy on OTCs, but as we've been seeing, and we haven't seen for a great deal of time, they just have not been producing the awesome, beautiful, perfect panic bounce, 30, 40% bounce off of that back to view app. It's just not been happening. So now you have to adjust and say, well, I have this awesome playbook, but if the market's not saying that, if you don't have a collection of opportunities that showcase that, hey, this pattern is actually possible, it's the probability of it happening in this market today is probable, then really just swimming up a creek without a paddle. You're just rowing up a creek without a paddle, if that's the saying there. So I think that's best for me as well too. And I wrote in my journal the term would be working memory, whereas I don't necessarily have to keep that in my own head. I can just keep it on the computer to say, oh, okay, we have a stock today that's moving 70%. It's got decent news catalyst. It's a low floater. Okay, yeah, I think I remember this stock, how long ago was that it did this? And then it kind of did like a little double toppy and then trying to make these broad assumptions and just kind of guessing points at that time when it just became a very guessing game of whatever I remembered or recollected at the time versus now we can look at the hard data and say, okay, here was the actual chart of that stock and compare it to, here was two other stocks that also had a similar float. They also had kind of a similar, they're both American biotechs, of matching those factors up and saying, okay, wow, here is the sentiment for these ones. They do have their little crazy morning volatility, do whatever they want to do. There's really no predictable pattern or any showcasing here that I'm seeing that they're all saying the same thing, but hey, we get past that morning session, hey, they're all looking like they dump and have a nice little fade ride as a short. So then we can be looking for a trade off of that. So expanding off of that thesis and continuing on that data collection side with each and every day of tracking what different movers do we have, second day movers, do we have third day movers, or the different multi-day setups that we have that way. Good work being done on that side. Back to the data of, so that's why I think I traded those second day and third day plays a little bit more, because I was charting them a little bit more and adding on top of my own conviction in the trade to say, hey, here are the charts to represent why I'm going short this stock today or why I'm going long this third day, Pareto day, whatever reasons that way. For daily aspect, I did bring in most of the paper money on Wednesdays, even though my best win rate days were on Tuesdays and Thursdays, and Fridays still, for some reason, I do not trade. Those were my least traded days were on Fridays, and for some reason, that is one of my worst win rate days as well. So just something about Fridays, whether it's the end of the week for me mentally, or if it's just the patterns themselves, that they're just not working out. I'm not keying in on the exact pattern that I need to be focusing on those Fridays. That still needs to be worked on and adjusted to as well. And then I was mentioning some tickers that I wanted to highlight just for the sake of, okay, they were pretty decent beyond 10% profit opportunities there that I was able to nail, whether paper or actual small position size going along them. But I'll just rat them off here quick here. ENSC that I had overnight short on the 8th. And reviewing, this is best served for me as well, just reviewing the actual day trade, daily recap videos themselves to go into those individual trades. ISIG, I went long on the 9th. That was a nice trade. ABCT short on the 13th. EFOI long on the 13th. SYTA long on the 7th of this month. And then VBIV short on the 1st of this month. And plenty more trades that were very, very nice opportunities and profit opportunities there, but just those are the few that I highlighted for this month for me to take back a look as the heavy hitters for this month to learn from. And I just screwed up my little gauge there. Let's go. I think it was there. So for this journal, like I mentioned, this month was pretty much all paper trading or in the realm of extremely small position sizing, as we're getting back to that confidence factor and just profitability factor of, okay, what are we looking at for trading? Who are we as a trader? What do we like to fit as best? Because I was just kind of a little bit of gunslingerish, or just convincing myself that these were profitable trades when they really weren't, and they didn't key into any of my personality, but I just kind of went with it because I was in front of a screen and fell into a little bit of a trap that way. So after seeing the data and understanding, okay, we are still not profitable and we're still losing money after we were on a nice little bit of a reclaim in this trading career on the P&L side, it's just fallen off. And okay, we got to do something different. We are not going the direction we want to go, so something's got to change. If nothing's changing, nothing's going to change on the P&L side either. It's insanity to think that. So going into more of that paper trading, pushing that experimental educational aspect hard, and that's what bled into the monthly goal for this month of expanding my horizons. Of with each and every trade, I wanted to let it be that experimental, to let it be, okay, just test this thesis, what it's going to do, what is it going to hurt, because we're using small position size, because we're using proper extremely, not even proper risk management, but extreme risk management of, if it even just barely ticks beyond what I think it should do, cut it, move on to the next one. Not even move on to the next one as well, but as a thesis for the trade, okay, this is doing something different than I thought it was going to do. Wipe away the bias of a position and look at it with different eyes that way. So that was great steps being made there continually as we're coming into the end of this month and the start of January now. We're slowly taking steps beyond what we did from the base layer of, okay, now we're establishing profitable charts that we've been in, that the market is showing. Okay, now we can dive back into the next layers of this onion of, okay, now deal with back again with that emotional aspect of money, the little attachment to money, the position sizing, risk reward, so many different factors that go into what trading is, external factors of how I come into the market day, how I deal with the trades themselves at the end of the day, how I review, how I go forward from there. So continue as we are progressing slowly through each of those steps, introducing new layers to the onion to continue to keep us on our toes and evolve us more and more each and every single trading day. And working memory, I used that term as I thought it was a cool little term to use for the charts that we're now starting to collect harder for. Hey, this stock had a first green day today. Put it in the Excel workbook, use it as a chart here, and keep it as a reference if we get anything similar to it, because it's, I can look at a chart one day and say, this is just kind of a stupid, it was a stupid, trader. It wasn't really that awesome. Yeah, you could say it had a 10% down day and it's a profit opportunity to be a part of, but, intraday, it wasn't really profitable to trade off of. But I can take that chart, and if it wasn't that individual chart on the day, if it necessarily didn't fit my criteria or just it was kind of weird, I can still take that sentiment for whether it's the intraday move or hey, it did have this little weird funky move here at this point, of using that data to then apply to the next chart of, okay, wow, well, I see another thing here on the next day, that another chart that's, again, it's just kind of weird. It doesn't really fit my style, or just kind of not ringing all my bells. But piggybacking off of what this stock did this day, I can also see a tradable pattern here at this point that the same stock did the day before, playing off of that, building trades that wouldn't have been there had I not had the chart in hand to review or to learn from, to apply to the next stock the next day. Because it's great to have these, that's a great little quote that just thinking of right now, you can have these awesome trades on the intraday itself, but it's, it is the next trade. All that really matters is that next chart. And it's all that matters is the chart here in front of you as well. If you're thinking, oh, this stock is just the stupidest company, if you've got every single factor in your favor of why this stock should die or why this stock should spike, but yet it's just not happening, nothing else matters. Price is the only thing that pays. How many times have the lessons been told out again and again of, you can have the most conviction and you can be the actual owner of the company, but you have the most conviction and understanding of why this company should go up, but yet it's continuing to die off. Price is the only thing that pays, and that's going to be the ultimate equalizer in everything. And being able to learn from that and say, well, it should have done this logically, but it didn't, because the market is the number one thing that will not follow logic again and again and again. So continuing to build off of that is going to be key for me going forward in this trading career. Mentioning as well, we were supposed to get this great, awesome hot market that these winter months, we get the Santa Claus rally, the winter months, January, February, are supposed to always be awesome, opportunity coming out of your ears. But at the start of the month, we didn't really get that. The memers, AMC, GME, were kind of dying off a little bit. I think capital gains tax losses there being accrued on those ones. It was just kind of that weird mixed bag for the overall market of everybody's kind of waiting, saying, hey, where's this awesome profit opportunity that everybody was waiting on? But a great lesson here again, that the market does not promise anything, and it doesn't abide by any specific rules or schedule other than the opening and closing of the market, but of how that you think it should go this way, but it doesn't care what you think. Nobody cares about your chocolate croissants, to quote Chris D'Elia. Learning again that, it is the market. It doesn't care what you think, and we're here to take our little tiny slice and just run away as fast as we can. We're not here to prove ourselves right. It's just about taking the little scraps that are offered. And even through what I felt was the little scraps that were offered, plenty of opportunity. I mean, every single day there's something new. As long as there is price movement, there is opportunity to make money, and it's just about fine-tuning the details of what's the opportunity there. And it's a game against all of retail, because insiders have the best knowledge and God knows that Wall Street is just on an entirely different planet of their understanding, their information that goes into the algorithms and the way they trade and go about their business. It's a game against retail. The rich are meant to get richer, the poor are meant to get poorer, and the system is specifically designed to keep that way. But we're still looking to strike it rich and fall through the cracks of the understanding, because there is that possibility there. And that's the beauty of the system. For how big and how opportune it is that there is still the opportunity to slip through the cracks and just take that tiny little scrape each and every single day until we amass our own mountain to then finally step into the game as one of the big boys. It's a high dream, but I know we can get there someday. Mentioned the monthly goal of this month was expanding the horizons, of just coming off of kind of this little stupid losing streak of what I felt I was in a little bit of a rut, or just kind of niching myself too short and taking losses for that. Of now we are taking the veil off and just saying, okay, screw the whatever predetermined bias I had or just fallacies I was believing as a trader. Go back to the basics and the bare nuts and bolts of, are we in the right charts? What are we looking at? How is price moving here on this chart? Or why are we in the stock today? Going back to the bare nuts and bolts of that, I think I can't attest that every single one of these trades was hitting a key factor or striking poignantly along that goal of expanding my horizons, because I did fall into some familiar trades, but I can't slap myself for that of trading what's known. But again, I did feel we were taking great steps compared to past months, especially of my past trading self of, okay, hey, I think this stock could do this. Hey, push the button. Let's do it. Get the reps in, when normally I would kind of shy away and tend to be on the watch side of the trade versus actually being in the trade, when that firsthand experience can kind of be a lot more valuable than, we can learn from somebody else who's made that mistake before. That's a lot of lessons to learn from. And there's plenty of them out there, but again, it's that vindication or reason for why that trade should be there or not be there is sometimes best served in the brain if it's your own idea or you had that firsthand scar for why that thing happened. So just continuing to push harder that realm as well, while still maintaining the non-YOLO risk aspect at this point. It's another thing I wrote in my journal of there's that great, I'll put it in this perspective that, we always want to be in this mode of adaptation and getting better and just growing. But then there's that little voice in the back of the head that says, okay, well, we pushed it pretty hard here. Let's wait till we get a little bit of a cool down or a break, or wait until we feel better in order to take that step. And relating that to the theme of like, oh, well, I'll wait to be a better person when I do feel better, or kind of along those lines. But it's never going to get that way. Waiting until there's a perfect, precise moment, you're going to be waiting forever. And that's the thing with trading that I was just telling myself of, I want to wait until, okay, we can do this little experimental trades and kind of side trades when we do get to a stage of profitability, or when we do find a little bit of a rest. But when is that ever going to happen? And when are we never going to have the overhead of the looming market that is just always changing and adapting, and life is life, and expecting it to be something different is kind of just waiting on a war. It's just putting yourself in a situation that makes you, again, so apt to just how the wind blows in the market and never really actually doing anything, but just continuing to live on the lie that, oh, well, I know I have the right idea and I'm going to eventually do it, but it's just I'm waiting on somebody else, and using that as an excuse versus actually just getting it done now, even though it seems kind of hard. Doing the work, the process of understanding who you are, and evaluation, reevaluation that way. The time is now. That was the biggest point I wrote there for that journal entry point. And gosh, that is really all I had, just kind of keeping it brief, because that is what this month was. It just really found itself harder, I felt, in the individual daily recaps themselves for how much trading preparation we were putting in to the trading day, and then the videos themselves of the recaps. And I don't feel it's served best by, okay, now we did all that hard work for 30 days or the 20 whatever days we had trading here for this month. Now let's review all of that cumulatively in one little 30-minute video here. Gosh, I feel there's just so much more. There is just so much depth to these charts and these red and green candles here than just what it shows on the screen here. And I do feel that it requires far more than just a little monthly recap in order to obtain the best information and growth knowledge from them as a recap system. But yeah, I'm just kind of drawing on words here at this point. Yeah, I don't really know what to say. I'm just going to close it off with, man, great 2021. No matter what the P&L was, and don't really care what we ended up as. I think we're still I am still negative in this total trading career from where I started at, but I think the growth aspect is becoming more and more evident in my brain and mental awareness than even the P&L aspect of it. The knowledge P&L is just growing so much more, and just the mental health that way of, gosh, the P&L will follow, the money will be there, but if the foundation is laid, that is really all that matters. It's just the easy building blocks are so secondary and easy to come to follow that. It's that 0 to 1 process that is the hardest point, as to quote Peter Thiel there. But that is all I had. I sincerely thank you guys for watching, and high five future me for watching this video recap video. We will catch you guys in the next year.